Good afternoon, everyone. I'm Jordan with Citywide Mortgage Services, your personal mortgage planner. Now, you're probably wondering why I titled this video, Am I Boring You? Well, apparently I have been, and I'm sorry for that. I was working on videos with a couple of 30-something guys the other day, and they said, Jordan, you really got to do something about your mortgage minutes. Why don't you try being more like Cartman from South Park? Now, I have to admit, I don't really understand that analogy. For me, I don't know how much like Cartman I am. And truthfully, mortgages aren't exciting. Are they a necessary evil? Well, for most of us, yes, they are. My job as a mortgage broker is to educate and advise you. I don't have a lot of the fancy bells and whistles and in your face. That's not my style. I'm an educated professional, and that's what I like to bring to my clients. So I'm sorry if I've been boring you. I'll try to be a little bit more engaging for you. Like I said a couple of weeks ago, I wanted you guys to know some top mortgage terms that you might not understand. So I'm going to continue with 5 more today, just as I promised. Number 1, well, what is a mortgage? A mortgage is a legal document that pledges your home as security for the repayment of your loan, right? Number 2, mortgage broker. Well, that's what I am. I'm a licensed professional that works on behalf of my clients, and I work with several different lenders, including banks, credit unions, private lenders, and more. First and foremost, I work for you, the client, to get you what you need. Number 3, mortgage default insurance, also known as an insured mortgage. If you have less than 20% down payment, you're going to need to get mortgage default insurance. And this protects the lender in case you cannot satisfy your financial obligations for the mortgage. We can get this through the Canadian Mortgage Housing Corporation or 2 other private lenders as well. Now, don't worry, you don't need to go get this insurance. I'll have that done for you. Number 4, open versus a closed mortgage. I see clients not quite sure what these mean. An open mortgage basically is a more flexible mortgage that allows you to pay either in part or in full the mortgage prior to the end of the term. But for this flexibility, you're going to pay a higher interest rate. A closed mortgage is less flexible in that you can't, prior to the end of the term, pay off your mortgage. You can, however, make lump sum payments, increase your monthly mortgage payment. But if you're going to pay off your loan in full, then you will be charged a penalty for doing so. And finally, a pre-approval. So many of you guys are bantering about this term. So a true pre-approval is one where the lender is going to commit to you that they will loan you a fixed amount for your mortgage, and they've reviewed documents, your loan application, your credit score, debts, assets, income, and so forth. And they will commit to lend you this amount upon the closing as long as nothing has changed. But please do know that a pre-approval does not guarantee you a loan. Of course, the lender has to verify and okay the property as well. So please don't make that mistake. Anyway, I hope this was a little bit more exciting. Like I said, mortgages really aren't exciting. Sorry about that, but in my world, I find them pretty exciting, so I will try to pass that along to you. I'm Jordan with Citywide Mortgage Services. Thanks so much for watching. Have a fantastic weekend. And of course, I look forward to seeing you here again next week.